Hello guys, and welcome once again to my YouTube channel. So I want to share with you one of the strategy that I use basically to trade VIX75, which when it comes to derivative pairs, this is one of my best and favorites. My most favorite actually, I can say, because of the numbers and all that. So I'm just going to do a quick rundown of the strategy so that you also get to understand a little bit about it. Right. So when it comes to this particular strategy or this particular methodology, it's all about you understanding price as raw as it is. Over decades and decades now in the industry, people, they have come up with a lot of things, indicators, all those things. All they are trying to do is simply to read the market, the price action. They're basically trying to read how price is moving and how price is going to move. So ultimately, price must be read. If you are not able to read price using these candles as raw as it is like that, all those indicators and everything else, it will be just unnecessary noise. It's just unnecessary noise that people have been using for years now, unaware that you can actually read price and understand the market structure, where it's coming from and where it's going, without having to add additionals. Because if ever we are all concerned about the price, why not go straight forward to the price? Right. So this is basically an institutional understanding of the markets, because remember, institutions are the ones that move price. So if you look left here, this was in 2021. Let me put a straight line. If you put a straight line here, you can see that the market broke to the downside, right? So that one, I can call it a major break of structure. I want you to see how profound this is. Basically one of the best strategies in the world that you can ever encounter in the industry. You can come and prove me wrong. But the facts are as I am stating them. So you realize now that here to the left here, even going up, when they induced right here, let me tell you something that you might not hear this for the second time or the third time on YouTube being spoken randomly by anyone from Norway. This takes a certain level of understanding of structure, a certain level of understanding of the market for you to understand most of these things. So them inducing like this on the daily, right? For example, I don't have any much information to the left, but roughly, let's say this was a swing lower low, then that one is a swing lower high up there, right? So even if we are looking at it from that perspective, so here after them creating the swing lower low, inducing here, that's when they made this a swing lower low. So now you realize that after inducement like this internal structure, it will move the same way up until they reach the amount, the pullback that they want to reach. So let's say they wanted to pull back to that level. I don't know what percentage of the entire move it was. So they will maintain this up until they finish that entire agenda. So having this understanding, it will help you in a huge way, because you understand that there are certain levels of the market that the market might not even come back onto if ever they do a certain move. For example, here, let's say after this inducement, and if you go to lower time frames than the daily, you realize that on the 4 hour, 1 hour, whatever, that would actually have been it's actually a change of character actually on those lower time frames. So you realize that someone after this could have said, I'm going to buy if ever it comes here. But now, based on this leg here that is in between, this leg is in between now. It can't, because the minute it induces here, the minute it takes this leg out like this, that's an inducement already. And it means that should now be our swing lower high. So if they still want to push price higher and establish the swing lower high up there, it means that move that one might actually be waiting for, you wait for the market to come and take out this, then go. That will not happen. But if ever, let's say here, this leg was not here, if ever this was just one move straight up like this, definitely it could have still, that could have happened. There are scenarios where it actually can do that based on the particular situation that will be at hand. So this leg that is in between is what made this market not to come to this extreme demand. That's one of the reasons they didn't come there. Another reason why they didn't come to that extreme demand is the fact that one of the ways in which institutions manipulate retail traders without institutional understanding is whereby once they leave it out like that, people, when they see the market, when the market comes back to the zone, they'll buy hard. For example, here you could have bought hard, it went up, they bought out again, then they were taken out like that. So them taking out people like that, it's actually a lot of liquidity on their side. So it actually works in both ways. So yeah, after inducing, how could have one taken trade to the upside? Let's say just looking at the daily, right? Obviously, you could have gone to lower time frames, but your main zones, you need to make sure that the daily and H4, that's where you identify weekly, daily, your major zones, that's where they must be found. Your major zones, that's where you actually identify your major analysis from there. So here on the daily, you can actually see that already that internal structure, it actually turned bullish. So it means even if they were going to pull back here, the maximum level of pullback was going to be this level here. Then they go up. So they didn't even come there, which was still okay because on the lower time frames, all you now needed was confirma confirmations of entry as well as other things also, including your Fibonacci retracement. All of those were just additionals that you could have added. But on a lower time frame, you could have also added this simple downward channel to the upside, which was broken upon the break there. On the lower time frames, you could have gotten your beautiful buys to the upside, getting your beautiful buys to the upside, even them coming back to retest, you could have actually entered more buys again. So the internal structure was still maintaining maintaining being bullish throughout that entire phase. You were supposed to. So one of the advantages now, you see as I will be proceeding with the analysis, you realize that there are moments whereby even if I get the similar setup on a minor time frame, like let's say a 15-minute or a 30-minute, after they induce like this, right? I can even buy here. If ever, let's say, I was on a lower time frame, I can even buy there because knowing my internal, because them inducing here, I know that they've established this as a swing leg, right? So they are now going up to create another swing leg. So identifying my internal structure, this was the high, this was the higher low, means even here on the daily, you could have even bought on the daily. You could have even bought on the daily like this. Simple. So entering there, that's why in the beginning I told you VIX75 is one of my best because I can even enter trades even on the daily. I can even enter trades on the H4 daily. It is without even any any issue with stop losses and all that because of how flexible it is. So yeah, based on institutional structure and institutional understanding, this was the first perfect buy was around there. Obviously on the lower time frames, the entry you actually realize that there are other entries that are here on lower time frames, which is good. Which is good because this continuation could have just given you continuation other extra entries going to the upside. So the lower time frames, they would have actually given you earlier entries than the daily. So them continuing to go up like this, it was just a matter of you just holding up until the induce. So you realize up there on the lower time, so they would have actually they would have actually changed structure up there before the daily does the confirmation. So the daily, it went on now to induce around here. So you realize that before they even induce on the daily, on the lower time frames, your 1 hour, 15 minute, or 30 minute, there is a certain change or shift of order flow that would have happened up there, which is actually an indication for you to jump out of that particular trade or that particular position. So there, that was now a swing, lower high. After inducing like this, after inducing like this, they now went all the way to the downside. They now went all the way to the downside. They induced like this, right? So they now came now. From there, they induced. So here, the reason why this is not a leg is because this candle, if you notice this downward candle, this second candle, it failed to break it. This one is also failed to break it. So there's nothing there. It's basically one leg that is going to that particular direction or to the downside, right? It's basically one candle that is going to the downside. The reason why here on this particular example that we gave here is because this candle here, if you notice the next candle, it failed. This next one, it also failed, but the third one, it actually succeeded to break it. That's why it's a leg. This one, there's no leg. There's basically one movement to the downside. So same thing here. If you notice this bearish candle, this one came, didn't break, didn't break, didn't break, didn't break. Nothing happened there. So it was basically still one move. Then one move like that. So that was what happened there. So even internally there, they were now also coming in a bearish way inside there up until they take out or up until they break structure. So here, according to just what happened there, on the lower time frames, you could have gotten this adjustment on a lower time frame. It could have been, it's actually a change of character on the lower time frames. So it being a change of character there, them coming to pull back like this, that was a sniper cell that you could have gotten there. Entering there, you are targeting the previous swing leg, obviously. That's your maximum TP when it comes to that, especially when order flow is still bearish like that. So here, you could have targeted there. So I want you to see how powerful VIX75 is. If you notice this first entry here, this first entry with a minimum lot size, you could have risked $50, roughly $50 with a minimum lot size. Let's say you have $100 account. Let's say you have $100 account, then you take a 0.001 on that particular position, right? You're going to risk $50, which is half of your account. But how much are you going to gain? You're going to gain 390, if not 400, if not $400. So it means by the time you hold this trade from here to there, your account balance instead of being on $100, you're now on $500 just by simply risking $50. So it was actually sort of like a one is to eight risk to reward, one is to eight, one is to eight risk to reward. So how long did this take? It was on the 26th of March to 9 to 8, roughly 8 May. So roughly took, I think, one good month, which is worth it. Taking $100 to $500 in a month. It's a lot of money when you're looking at it from a business perspective. When you're approaching the whole thing from a business perspective, it's actually reasonable money when it comes to a business perspective of things. Right. So you realize that they kept on going down and going down. They kept on going down up until they broke structure down there. Right. So them breaking structure down there, they are still bearish. Remember, they are still bearish, right? They are still bearish. And this is now they are swing lower low. How was it confirmed as a swing lower low? By the inducement. Here, the inducement was here. So same thing here that we did here. On the lower time frames, you could have gotten this buy earlier down there. On the lower time, the lower time frames will turn or change order flow first before the daily even comes to change that order flow. So it means before they even give this inducement on the daily, this will be the inducement leg. There will actually be your first target for those lower time frame entries. So once you see them now taking out that inducement, it's not just a continuation of the overall move to that particular direction. So after they induced there, if ever you're entering based on the daily, obviously on the lower time frames, you would have entered down there, as I said. Then just looking at the daily, you would have bought there. This one, it's a bigger stop loss when it's down here, right? Obviously, on the lower time frames, we would have gotten a smaller stop loss somewhere around those levels. Then it went up and went up and went up, hit a certain zone there. Because remember, there is no turning point on the market that you'll find where there is no institutional zone whether it's a supply, demand, or an order block or fair value gap. So they reached a certain supply level, then they dropped from there, which was a good also amount of profit there that you would have simply made there. So they came back again to the level here. Remember, this is one leg. The reason why, if you notice this example and this example, they are two different examples, two different market situations that most people they are not well educated on. Why are they two different market situations? This is one leg to the upside. This one, there was another leg in between here. That's why they never came all the way to this demand, right? Here, the reason why they came all the way to this demand is because there was nothing in between prohibiting, or there was no leg here in between that was uh, not allowing them to come back there. That's why they came back there. So understanding those two differences or those two different scenarios, it's something that most people are not, they're not well educated about on, in the sense that it's not, it's information that is still yet not accessible to the majority. So yet came all the way up until it took out our leg up there. So taking out our leg up there, that was a change of character, right? Change of character, right? Change of character like this. If you notice and you followed internal structure here, you realize that it never induced even below here. Because remember, so long they haven't induced, that trade will still be worth still holding. You realize that even as they were going up like this, up until this TP was hit like that. If you follow internal structure nicely, this is one leg, right? High, low, high. They came back here. That was an entry. You could have entered. This was all one leg because here they went up, failed to take this out again. So this was basically one leg up, down. They came, they broke this, which was the up, then the down. So eventually they induced after breaking the level. So that was why you could have held it all the way like that. So where did they induce now? Them inducing there, we now have a higher high like that. So that being a higher high, obviously them coming to the demand you're expecting a push to the upside, of which they didn't, which is still okay. It's still okay. There's nothing wrong with all of that. So yeah, along the way, you could have entered other entries. Like for example, yeah, they came back to the previous higher low, which was a sub-internal level actually, of which sub-internal structure will never change up until the institutional agenda is realized. So something like this, something like this, something like this. This was our internal structure, just like that. So they now came, as they were now coming down, you were simply going to do the same, follow internal structure. Our new low was that one, that was our lower high. They came here, they came back up, lower low, lower high. So all of this here, they actually presented a lot of opportunities because they kept on coming back to the lower high. Came back the first time, they came back the second time. So coming back the first time, you could have sold. So many other entries. Remember, I'm just showing you daily entries, but there are so many other entries. As I'll be proceeding, I'll go also to lower time frames so that you see that there are so many other entries that using the lower time frames you could have actually entered earlier. So they now came again and changed character to the downside, which was also fine because we now know that it seems if ever we had access to the weekly, I'll show you what would have happened on what the current situation that could have happened on the weekly that made the daily to behave like this, whereby they change character up and they change character down. There will be a situation on the weekly which will be looking that way. So here they came all the way up until they took this out like this. Right. So they kept on respecting your internal structure up until they reached there. So which is something that people are not well educated on. This trade, you can hold it as far as your internal structure is concerned. So here, when they now come and induce something like this, we now have a swing lower low. Where's our swing lower low? Is this one, right? They go up, if they induce to the downside, like what they did here, I now have my swing lower high like this. It now came in, broke structure. As simple as that. As simple as that. So int internal structure here was still being respected throughout. Remember, they were respected throughout up until they break structure or they change character if ever they wanted to change character. So they kept on going to the downside. They kept on going to the downside. They kept on going to the downside. Did another adjustment. Did another break. You can see that they're still bearish. Major break of structure like this. They pulled back to what level there? Lower high to lower low. Around 61.8, which was a reasonable pullback level there. So you realize that on the on the on the on the lower time frames, they would have actually given you entries earlier. Even here, I remember one of the days showing one of my students in the class there that even this drop, because you know that we are still overall in bearish order flow and all that. Even that drop from there, you could have actually caught it nicely. Let me go down to the 4 hour. So yeah, let me just finish on the daily first before. So yeah, internally, they kept on maintaining bullish up until they higher high, higher low. That's a higher high. They came and failed to take this out. This was now our new higher high because of this. They went up and actually took out the previous higher high and made this as a new high, a new low. They induced up there. After inducing up there, you would have actually gotten your sales from there because they actually did a very clean close pullback to the supply as well as the fair value gap up there. So this was a clean sell. From there, stop loss just above here. TP was the break of structure, or you could have held it up until inducement happens. Once inducement happens, then you know that we're now good to go. So on the daily, it, all I need is a rough, um, all I'll be needing on the daily is that understanding of what's happening, my major zones and all that and all that. So 4 hour is also a good time frame. Also, if ever you want to enter some entries on the VIX75, let me just show you here real quick. It's a very good time frame as well, in the sense that their entries, it actually shows you earlier, before the daily actually shows you those entries. Right. So on the 4 hour, you can actually see that after tapping that level, on the 4 hour, something started to happen now. Something started to happen. They came here, they induced now. Them inducing on the 4 hour like that, it was actually a sign. It was actually a sign. It was actually a sign. After they induced, they also came again and induced also like this. So them inducing there, that was the lower low. Then this one was now a lower high because it came now and changed character right there. So that was now a change of character there that happened there. It's a unique change of character that most people are not well educated on. So them changing character there, them changing character there, they were now just following our normal structure. They were not just following our normal structure. They came to this supply area. You could have actually entered sales from that supply zone there. This is my breakup structure. And notice how much consistent they actually moved up until they took whatever leg that they wanted to take, which is this one, the swing leg. After they take that swing leg, the agenda is now to create a new swing leg. So you realize that if you did catch from here, or even you see up there, them taking this out, like that. Someone could have even entered there. Stop loss maybe just above it. So here, if you caught this, you're supposed to hold up until we take out the previous swing leg. Where's our previous swing leg? All the way down here. All these are the confirmations that you find along the way. They are just opportunities for you to enter that particular trade. They're just opportunities for you to enter that particular trade. So here, you'll see that after breaking our overall structure, after breaking our overall structure, they induced there, they broke structure here. All right. Broke structure like that. So all they now need on the 4 hour is for them to take out this leg, which is going to be our change of character leg up there. Once they change that character up there, means we're now shooting up to create our swing, lower high. Mid top like this. So you realize that if ever they're going to change character there, this this internal structure of the 4 hour, which is this one, it doesn't change up until they finish that. So it will go on, on, on. Then where you see it inducing, you know, ever high, they come, they come, they come, they come. They say they want to come back all the way here. They can come. Once you see them inducing, you now have. So it will just be a continuation there because they are simply respecting the same leg there. So this is basically what might probably happen from now on VIX75. So on the looking on the H4, we can have a continuation of this bullish movement up until we change character. Then after it changes character, we anticipate an adjustment to the downside before overall continuation up like that. So going down to the 1 hour, I'm just going there to show you some entries that on the daily you might have waited and waited and waited. Yet there's always a way of entering such entries earlier than the majority of people that you might be connected to trading wise. So here they came and broke structure on the 1 hour. It's as clear as day. So seeing that, the first thing that happened, sub-internal structure, it actually shifted around up there, right? So here, what does that mean? This means that, for example, even if let's say it wanted to keep on buying, they could have still sold, given you this pullback, but not break the low there, then go up, something like this. So them now coming, them inducing up there before the major inducement, which is the 4 hour inducement. This is your 4 hour inducement. That's my 1 hour inducement. Minor, major inducement. So that minor inducement could have given me my initial entry, especially there where it happened. After it happened there, I could have entered my sell there. Where is my stop loss? Just a little bit above here, which is a reasonable one. My first tip could have been this, because if ever they fail to induce there on the 4 hour, they were still going to continue going up, right? So they now eventually induced, as you can see, on the 4 hour, which is good. So them inducing on the 4 hour, I now have an understanding that my sell there, I can even hold it beyond the level that I had predicted from minor from a minor picture perspective. So they are now just flowing in bearish order flow. This was now just bearish order flow. And notice, according to, so on the 4 hour, on the 1 hour, you actually realize that 4 hour change of that 4 hour inducement is actually a change of character on the 4 hour, which is good because we now have our swing leg up there, which was now our swing lower high. Your target is still the same here. You're targeting all the way to the downside. So notice how I could have gotten an earlier entry just by going lower, but my analysis is starting all the way from the upside. It's not even shifting. I can add all sorts of other confluences. Those are just additionals, but what I really wanted, I really got it. So this was additionals that one could have added to that particular analysis and all that. But the real analysis is simply the simple row structure that you're seeing that I'm plotting. So that was how you could have actually entered that particular trade. That was how you could have actually entered that particular trade. Even here, when they now came and took out this, because it's in alignment with our institutional agenda, you would have also sold nicely like this. And they kept going down, respecting our bearish structure inducing, going lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. I can mark and mark and mark. This was a level. The broke structure around here. The induced here. The broke structure here. The induced around here. Uh-huh. You see, they kept on maintaining bearish order flow, which is what I'm telling you that they'll keep on maintaining that. So this, what I'm seeing in form of inducements on the 1 hour, 4 hour, and even the daily, you are seeing it as simple, basic, normal internal structure legs. So here, them coming back here, there was a sniper cell there. Sniper cell, that one could have actually gotten the broke structure after inducing, obviously. So this was just now bearish order flow, flowing. You could have held this up until so long that order flow is still being maintained and all that, you would have actually still held that particular trade. So yeah, it also did something unique on the 1 hour because they induced here, they broke structure there. So that, according to the 1 hour, was basically a change of character. So them changing character up there, the prediction was now that we now have our, that was now the bias that we now have our swing low, right? Beautiful. Then them inducing there, obviously it was now internal structure, higher high. They came down, they broke structure, which was good. First move was good. So now they came back now and took out this, which was now a change of character to the downside. It means that was now a swing lower high because it changed this character so close like that. So it being a swing lower high, we're now anticipating sales to take out this swing lower low. So this was just inducement, pulled back to the extreme supply. Very simple sell, very, very simple sell that was so much obvious according to institutional understanding. Target is here, like this. So now what is happening? Now we need to understand that level that which I said, if ever they are going to change character, they'll keep on maintaining this current structure to the upside. So here to the upside, you can actually see that they are moving quite well. They're moving quite well. They are moving quite well to the upside. That was a leg, came down, came again. They induced. After they induced, they'll keep maintaining up until they change character up there, right? So they'll keep on maintaining that up until they change character. Then once they change character, they'll change that maintaining of things and all that. So here also this buy to the upside. I was so laughing at one of my very close trading friends as I was showing them even how I could have even bought how one could have even bought earlier from down here. All right, because currently you will be knowing that the market is still bearish, but once they take out that change of character, we are now overly bullish now for the long term. So going to 15 minute, I'm going to show you how even this buy, y- you could have actually entered that buy all the way on the downside, all the way down, 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 down. Because here on the 15 minute, according to the structure on 15 minute, right? Let me just show you the 15-minute structure. The 15-minute structure here, the basically bearish, the broke structure here. They came back to the extreme leg there, which was a very sniper entry. You would have sold nicely. They induced there, they broke structure again. Where? Here. That is according to the 15. So if ever they're going to change character up there, something must have happened below here, because what is making these legs, your legs, are basically inducement like this. For example, here, I can even show you how you could have entered this buy. This inducement is what, so here they were still bearish. You can see lower high, lower low. This was a lower low because of the inducement. So here, knowing that that's my lower low after the inducement there, one could have even bought there. Same example that I once showed you, your stop loss could have been here. Was this sub-internal or the internal structure there on the 15-minute? It actually established this as a higher low. So buying there, all you were waiting for is a shift of that sub-internal structure. If it doesn't change, you keep on holding. So it actually changed around there, which was simply a good profit. Came down. Coming down also, them inducing like this, you would have actually also took a sell there because the overall structure is still bearish. You would have even sold here, even if you put your stop loss above there, it was still a safe stop loss, whether with a minimum lot size, even if you were trading a small account, that was a very easy entry that you could have also caught. So that was now your lower high. This is now a lower low because of the inducement. Where is the inducement? It's right here. How could you have bought? You could have bought straight away there. Because even if they were going to continue and not change character up there, you could have still bought and gotten some interest, or made some money into whatever level they wanted to pull back into. But eventually they went all the way and changed character on the 15-minute. So that now, it's the sign that most probably we're now reversing. When you see the 15-minute change in character and all that, all you just do in that case, all you just need to do is to go to a higher time frame and identify what's happening. Once you identify what's happening on the higher time frame, you will definitely know why the 15-minute change character right there. So this is also another additional that you could have added after inducing, obviously, to the left. After inducing to the left there, like here, then they do this channel. After breaking the channel, you would have bought again here. And remember, these buys, you are holding them up until the level that the market will show you on the higher time frame. So yeah, let me go to the 1 hour. And those entries on the 1 hour, if you're just looking on the 1 hour, you're never going to catch it from the bottom like this. So this was another entry. So they are doing according to the 1 hour time frame. All they are now doing according to the 1 hour time frame is basically respecting the 1 hour internal structure. Is the one that just being respected there up until they change character on the 1 hour, because on the 15-minute they've changed, which is good. So on the 1 hour, I'm anticipating a change as well. Even if they don't change, it will still also be okay, because according to structure and all that. So yeah, the internal structure on the it actually, they only induced here to make this a leg. So they have to maintain that internal structure up until this is all one move, 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 up until they finish that agenda that they want to finish. So this is basically what's happening, and how you could have caught all those entries. Even here, you can see a very clean structure also, which is actually happening, presenting itself now. Sub-internally, they did this. So here, even now, you can even buy there, because that one is a confirmation that we're now going up. If you buy there, you can put your stop loss here just for safety. You can put your stop loss there. So here, our first TP versus the change of character leg. But if you're smart enough, you actually realize that you can even hold it beyond the change of character leg, because so long they keep on going and don't induce to the downside, you keep on holding those entries. So guys, this is just a taste. I'm just giving you a test of the methodology that I use to trade the markets and make sure that I maximize to the highest potential of earnings in terms of trading as a whole. So guys, thank you for watching. See you in my next video. Make sure you are subscribed to the channel, because such content like this, you might not get it anywhere else. You might not hear it being spoken anywhere. So see you on the next video, where I will do another breakdown of a different pair, showing you the same things, same methodology, applying everywhere to all the pairs.